Okay, I think we'll get started now. So welcome everybody, and thank you very much for joining us today. And we're going to be talking about M&A strategy and the implications that it has on HR and people. So if we move on to the next slide. So we're going to talk about what is the role of M&A in corporate strategy. So why do companies do M&A? Then we're going to go through different types of M&A and what are the people impacts. And then we have a Q&A with our guest speaker, Martin. So we'll start with some introductions. So I am Helen Carney. I'm a director in Deloitte, and I focus on supporting HR functions through M&A and handle all kind of people issues relating to M&A. I'm joined by another Helen, and I'll pass over to you to introduce yourself.
Thank you. I'm Helen Harvey. I'm also part of Deloitte in the integrations and separations team, specifically specializing in people M&A. I'm an assistant director in the team, and I'm really delighted to welcome our special guest, Martin Hallows, who joins us today. Martin, do you want to say a couple of words to introduce yourself?
Thanks very much, Helen. It's a pleasure to be here. I'm Martin Hallows. I've worked for around about 20 years in HR in predominantly global technology companies, and for about half of that have been significantly focused on mergers and acquisitions activities, leading people activities across that, across all parts of the globe. And it's a real pleasure to be here with you. Thanks.
Great, thanks, Martin. It's really great for you to join us. So if we start off with a quote, so here we're talking about what value we can bring as HR professionals supporting our organisations through M&A. And we have a really important role to make any M&A successful. And the way that we can really maximise the impact that we have is to really understand why is an organisation doing this particular piece of M&A, whether that's a merger, acquisition, divestiture, a JV, whatever it might be, and thinking through how do the HR and people elements either enable that transaction, or how could it potentially derail the objectives that you're trying to achieve. And so now I'm going to pass over to Helen for the next slide.
Thanks, Helen. So what is the role of M&A in corporate strategy? And just to highlight, when we say M&A is in mergers and acquisitions, I'm also referring to the broader types of transactions, including divestitures, otherwise known as separations. And this is because both integrations and separations are important elements of any M&A strategy. So as we know, the M&A role that plays in corporate strategy is really dependent on the business objectives at the time, what's happening in the markets, for example. Some companies may be looking to use M&A to grow and expand. They could be building their operations, looking to enter a new market, or acquire new technologies or products. It's also a way to gain access to new customers. And from a more kind of cost-focused angle, M&A also helps companies to reduce costs potentially, as we see with divestitures, and increase profitability, and also ensure value for shareholders. The M&A strategy overall will often depend on, like I say, what's happening in the market. So, for example, if a company is looking to gain a competitive advantage, then the leadership team may be pursuing a proactive strategy to acquire smaller companies that have potentially innovative technologies or unique products that can bolster the parent company's competitiveness in the market. So we see this frequently in the TMT sector. As you can imagine, there's a lot of startup companies in the TMT sector, and they actually come up with innovative product and technologies. And then the current big players in the markets actually want to secure part of that innovation. On the flip side of that, M&A can also be more of a defensive strategy. So businesses may be looking to protect themselves from the market disruptors, for example, or potential competition. Ultimately, if they don't get there first, then a competitor might do so instead. And we're going to talk a little later more about the types of M&A transactions that you might come across, and also specifically the kind of people challenges that are associated with each of those. In the meantime, if we actually go to the next slide, it would be really great to hear from our guest today, Martin. Martin, could you tell us a little more about why, in your experience, organizations have actually undertaken M&A activities in the past?
Yeah, I'll give you a couple of examples from my days at Intel. One kind of quite specific example, it was about exploring new business areas. In the mid-2010s, Intel was pursuing the market opportunities related to data growth, the exponential growth of data processing, and the computing power needed for that. That was a key overarching strategy that Intel had. And we acquired and integrated 2 drone businesses, creating a drone division within the organization. The view there was that the industrial applications that drones were involved in, for example, surveillance and monitoring over vast areas, processing a lot of visual and other types of data, would produce the need for the computing power that would then be, generated and delivered by some of Intel's other technology. So there's both a revenue opportunity in the market that was being sort of bought into and gone after with those drone businesses, and also something that might actually then benefit the more core business at Intel. So that was a very interesting one in terms of pursuing 2 avenues. Very quickly, another one that has been, I think, critical in the technology market, perhaps not this year, but in recent years, aside from the most recent 12 months, is the whole idea of talent acquisition, because it's been such a competitive market and so expensive to acquire and then integrate talent. Businesses have been acquiring small intact teams, primarily for their talent, perhaps more so than some of the other things that those teams have been able to produce, in order to then have a ready-made team to add into their overall set of employees. So that's another avenue that organizations have gone down, using an M&A type structure to increase the talent acquisition opportunities they have.
Thank you, Martin. That's really, really good examples there. Perfect. Shall we move on to the next slide?
Cool, thanks, Helen. So just wanted to provide an example of the kind of thought process that the business might go through before it decides to embark on M&A. So usually the decision to do some kind of acquisition or divestiture is based on a business problem that they are trying to solve, similar to kind of the examples that Helen provided. So this slide focuses on an example of where you're trying to acquire some kind of new capability. And you have 2 options really about how to do that. You can either buy something ready-made, or you can build it up from scratch. So to identify which approach they're going to take, an organization would look at all of the various options and look at whether they should do it organically or inorganically. And you would do some modeling potentially to look at, various different factors. What are you going to have most success in doing? And you'd look at a couple of different criteria to decide which path to go down. Often, the time to develop is a critical one and one of the key factors in making that decision. Obviously, if you're building something from scratch, that can take a long, long time. Whereas if you acquire something, you're effectively acquiring a ready-made solution, whether it's a team of people or a technology. You're buying that, and it's effectively overnight then yours. Obviously, the actual acquisition process takes a lot longer than that, as we all know, but it's certainly probably going to be quicker than hiring 3,000 people to deliver something. And you have the added bonus that that product or market or technology or those people are already successful and are very good at doing what it is that you are trying to do. Of course, there are different downsides to doing that. And whether you make a decision to build it or buy it, there's a role for HR to play, and certainly availability of talent and things like that are really key. So putting those HR and people considerations at the centre of those decisions really is important, and HR has a role to play to kind of make sure business leaders understand all of those people implications. So if we move on to the next slide. So we're going to talk a bit about the key reasons why businesses go through M&A. And I'm going to focus on the first kind of green box at the moment, the improve the core ones. So the first one is around capturing market share. So that's about creating scale, either through an acquisition, that could be within your current geography, or it could be about entering a new geography. And the business that you're buying would probably be quite similar to your own, and it's probably a current competitor. You could also create that scale by creating and improve your core business by creating a new product or capability. But it would be something that's basically enhancing what you already offer. So it's not fundamentally different to what you're doing today. So for example, we've seen examples where to improve the customer experience, a company acquires another company to create a new sort of platform for customers to use. But the actual product that is being sold is exactly the same as it is today. It's just making that customer experience better. And then the last two boxes under improving the core about divestitures. And we've seen a lot of divestitures over the last few years, and it still seems to be a big trend in the market. And this might come about because the business is looking at all of its various interests and deciding that, you know, it needs to focus on its core business a bit more. And these other businesses are distracting focus, management attention, that kind of thing. So in previous years, there was a trend towards diversification of business interests to have, you know, your fingers in many different pies. Over recent years, and partly this is due to kind of investors and activist investors in particular, there's been a drive towards more focused businesses, which has led to a number of different divestitures. And it allows that business to focus on what it's really, really good at without the distraction of other businesses. And then, of course, the final one is about generating cash. So obviously, as Helen mentioned, if you sell something, you get some money for it. So that's a good thing. And you can use that money either because you're in distress, your core business is in distress, so you need that cash, or it could be because you want to invest in something new. You want to invest that money to pursue a new business strategy. And I've recently worked with a business where that's the whole reason why they were doing that divestiture. They wanted each of the businesses to focus on what they were really good at, and they wanted to use that cash to acquire new businesses and invest in the infrastructure that they had, specifically the manufacturing sites, to really upgrade them with, you know, the best of the technology that they could to make their core business better. So if we move on to the next section, so Martin, I think this is over to you.
Yeah, the moving into the adjacent markets, I'd see as being something, again, drawing on my experience in the technology sector, being something that's been quite prevalent there in recent years. A lot of this about these mega organizations that are out there generating significant cash and looking for ways to invest that to generate, you know, a shareholder return, and B, thinking about how to jump on the next wave of technology innovation, which has been, you know, moving at such incredible pace. You know, often these companies have grown to that scale through being on a wave themselves and sort of looking for these opportunities to take that further somewhere else. So it's both, in some cases, an offensive strategy, getting out there and looking to be a bigger player in that market by, for example, acquiring a disruptor and helping that organization scale using their own resources, or sometimes more of a defensive strategy, often against similar competitors, looking to actually, you know, get into those businesses first and actually, you know, achieve that market growth themselves. And certainly in my experience here, a lot of the ways that these organizations that I've been part of are doing this is using their own scale and their own resources to drive the next generation of growth in some of these businesses that they're going after in those adjacent markets.
And also looking at why business strategy might be to actually create a new business. Well, it does, like I said before, depend on the market and also the sector. And, you know, as Martin mentioned, from the technology perspective, it can be very much about the innovation and capitalizing on the innovation piece of it. An example is creating a new business, such as a joint venture or a JV, as it's often referred to. This can give the opportunity to capitalize on those market trends, new technologies, potentially new products which are emerging as well. And an example of that, a few years ago, I actually worked on a carve out and JV, so carved out and separated a piece of a business to create a JV with an interested party, the buyer. And this was in the automotive industry. As we know, and even in the news last night, there's a lot going on in the automotive industry at the moment. Particularly, there's a focus regarding the transformation from new technology with new energy vehicles such as electric cars. And actually, in this case, the combining of the two businesses in different regions across Asia actually meant that they could specialize because they specialized in different technologies. It offered the main established supplier and business an immediate access to a brand new market for them, which was actually the Chinese market, which is a significantly growing market in that space. And their JV partner was already well known in that space. So it opened up immediately a brand new market, a big market, and allowed them to invest and grow in that space and keep up, you know, with their competition as well. The businesses, once combined, actually meant that they were able to reach even more customers and suppliers and establish new technologies, paving the way for the future innovation in this space. And of course, one of the biggest challenges from a people perspective with JVs in the new co perspective is the structure. And for that particular example, we had to answer a number of questions such as, you know, what will the new target operating model be like for this new business? What is the right talent strategy for the new business? You know, how will we actually logistically separate out shared resources from the carved out business who will then be transferring? And what regulations would need to be followed across those multiple jurisdictions. And there were multiple jurisdictions. It was a very large global deal. So of course, one of the main elements of that was about the new organization structure and the org design, which needed to be figured out, as in how that's going to look like, what is the JV going to look like, and how is it going to be set up for success. If we move to the next slide, I think, Helen, over to you.
Yes, I think we have a mentee now. Correct me if I'm wrong. So if you could, if you've not used Mentee before, all you need to do is on your phone or on your web browser, if you go to mentee.com and enter the code that you have there, then there'll be this question, and then if you could just answer the question. So what people factors do you think are overlooked when businesses are preparing their M&A strategy? So while we wait for answers to come in, Martin, perhaps you could give some examples or some of the insights from your experience here.
Sure. For me, I have a big passion with change and transition and the impact of cultural differences between organizations. So I think organizations, from the conversations I'm involved in with other organizations, and with you know, consultants like Deloitte, you know, we're much better at this today than we were, you know, even just a few years ago. And so maybe overlooked is too strong a word. Maybe it's underlooked. You know, we're doing it, but we could always do more. And I think what's important for me is there's this human element, and there's the businesses involved are often, you know, really keen. For example, an acquirer really keen on saying how great they are as an organization and selling that idea to a group of people that are coming on board. And just as a simple example of this, they missed that first challenge of, well, I didn't choose you. I haven't gone on that journey of thinking you're great in the same way that you have and the people that work for you. Maybe I'm struggling to see where and how I fit into your organization. Maybe some of my leaders are leaving as part of this and I'm struggling to see my place. And there's, you know, I've seen an overweight on we're wonderful, come and join this wonderful journey, and an underweight on how are you feeling about this, and that's, you know, where I have a real passion to do more in this space and look more at this area.
Absolutely, thank you. And I think that's echoed in some of the comments that we're getting from the audience as well. So I'll just pick out one or two. So cultural fit, I think, is an interesting one, and certainly with the clients that we work with, there's a lot of talk at the beginning about cultural fit and how do we combine these two cultures, or how do we create our new culture as a standalone business, etc. And I think what we miss out on as we go through that M&A journey is we get sort of overloaded with all these other things that we need to do, and we kind of lose sight of that that cultural work. And I think business leaders find it quite difficult because it's so intangible to actually do stuff about it. What they need to have is kind of practical, this is what I need to do, and this is how this is the outcome I'm going to see. And it's very difficult to do that from a cultural perspective. Helen, I don't know if there are any others that you wanted to kind of pull out from here.
No, I think, I mean, it's really interesting to see how much culture and communications come up, across the board here. Diversity as well. There's so much that needs to be planned for, as we know, when you're looking at the people part of the strategy. And I think in my mind, it is really very much, echoing what Martin said, making sure that communications is happening in the right way, that there's enough of it, but not too much, that there's, the right kind of level and balance to make sure that employees feel like they're actually going on the journey with you, as opposed to being, sort of dragged along, if you like. There's a fine line there, and I think there's a lot that leadership can do to really invest in that space with the communications, town halls, those sorts of things, making sure that people feel engaged and that they're part of it, as opposed to just reacting to it.
I think we can go back to the slides. We've got some numbers about M&A and what some of the risks involved. So Helen, over to you.
Yeah, so just to have a quick look at this, as you can see, high level, there are many pitfalls potentially and risks that businesses can fall into if they are not fully prepared for a transaction. So it is really important to make sure that the businesses are thinking through what those potential risks and pitfalls could be, particularly in the people space. It is often overlooked, as we know. And when we think about the strategy and the kind of early on talent strategy and people strategy, as we just mentioned, there are so many pieces that play into that. Engagement, retention, those type of pieces, as well as the reward strategy and the overall kind of reward and recognition piece as well. And as you know, losing key talent just at any point in time within the organization really can have a negative impact on not only morale, but also on the business operations and the smooth running of the operations, which is not what you're going to want once you've, invested in potentially acquiring or divesting a new business. You want to make sure that the right people stay around. And I think, Martin, from your perspective, I know we talked briefly about this before, but what do you think could actually contribute to the drop in productivity that's mentioned here that can actually have the impact on, business operations within the first 4 to 8 months post-close?
Yeah, I think what you get is this initial excitement phase where everybody's buzzing around the thing that's going on. Not everybody, many people are, and then as reality kicks in, there's a risk, and I have seen this in real life examples. There's this risk that the acquiring organization says, okay, we're done. We had a plan. We've executed the plan. People are on board. Let's move forward. And what you've got is a much longer transition phase for the people going through the change, whatever that change is. And they are then struggling with that change when perhaps the rest of the organization thinks it's done. So they become distracted either by lack of information, or by lack of understanding of business strategy, or lack of clear communication, or lack of understanding leadership and changes in leadership structure. That there's a lot of this can actually be borne out in the idea of cultural clash. A lot of those things are really kind of the meat on the bones of what does it mean to be in a different culture? And people can struggle with that, and then, you know, either they become disillusioned with what's going on, or they really want to, you know, still be massively productive, but they can't because they just don't really get how the new world works. So a lot of those things are related to a plan which has perhaps been done and executed, but wasn't long enough, or wasn't attentive enough to certain of the human dynamics and the human needs of the deal. Just one more thing, the flip side of that I have also seen sometimes is almost the reverse of that: too much. You know, there is a delicate balance to strike here. Over communication, too much information, too much time spent transitioning, and not enough time spent being productive. So there is a balance to strike. I think more commonly we see it being underinvested in than overinvested in.
Yeah, they're really good points. And I think just one other area to touch on before we move on to the next slide is around that kind of careful planning and consideration around specifically the reward and executive compensation pieces as well, because it's important to tie that back to the KPIs actually, and make sure that, you know, for example, the bonuses which may get paid out are actually linked back to something which, you know, is an objective for the business, so that when, you know, that kind of retention and the reward plan is actually put in place, it literally does tie back to the strategic objectives of the business to make sure that those are delivered ultimately, and that the business, you know, reaches the success that it's due to and meant to from, you know, either the acquisition or divestiture. Okay, so moving on to the next section. So I mentioned a couple of questions before that you might want to ask from an HR perspective as an HR leader. These are just a handful really, but you can see that there are, you know, key questions that you might want to ask, and there's probably, you know, the folks on the line will probably be thinking, yeah, of course, I'm going to want to know about the structure of the deal. I'm going to want to know about what that means for the people. What does that mean immediately? What does that potentially mean down the line? And if we look at, for example, the deal structure piece, it's a really important one when we think about the impact that might have on the legal entity rationalization potentially, what that might mean from an employee transfer perspective. So if you've got a global employee transfer or a legal entity move, you know, people moving into one entity or, you know, several potentially, then what does that actually mean from a people perspective? What regulations are going to kick in? There are so many different regulations across the globe that actually that has to be really carefully planned for as well and considered. And what we find is that businesses can sometimes forget the impact of the consultations, whether that's with employees or unions in the overall transaction timeline. And there's a pressure on, you know, the HR teams, the leadership, to get transactions done in a short time frame, you know, usually because that's, you know, the way to maximize value within the deal often. But that does mean that those timelines need to be considered and planned out and mapped out. So the earlier you start the planning, the more effective and more quickly usually you can actually execute when it comes down to it. Martin, from your perspective, just on that point as well, what are the sort of most important questions that, you know, stand out to you potentially from this list, or if there are any others that you might have that you would want to find out answers for early on in the deal?
I would certainly be asking all of these questions, and I think one more that I'd add, and I'll frame it in an acquisition context. You could flip it in a divestiture context, but I'll frame it in an acquisition context. Who's leading that acquisition from within the business that you're working within? What are their skills and capabilities in that respect? What support might they need from a people perspective in order to be a very effective leader of that transaction? What team is being formed? And how does that team need support in order to make sure that if we think back to what I said before about some of those transition things, what support will that team need to make sure that the people issues are being correctly identified and attended to? You may be in a really good situation where you know your business well, and you know, okay, that's great that we've got person X on board, person Y is going to need my help. Investigating that can really help set that deal up for success. So I'd certainly be focusing in the integration team and how an HR organization can support that team as well.
Perfect, thank you. That makes really good sense. I think we've actually got another Menti coming up here, so we'd like to pop over to that for our audience. what do you think are the biggest people challenges in integrations and separations? So I think whilst we're sort of waiting for a couple of answers to come in there, Martin, what are from your perspective, what do you think would be the kind of, key challenges that you've seen? I mean, we can take integrations if you like first, but what from your perspective is one of the key challenges?
Yeah, the thing, certainly early in my sort of career in terms of M&A and integrations, pace. The pace of the process and being well prepared for that was actually a big challenge. We've talked about some of the things, I can see them popping up on the screen now, some of the things that sit behind that, but actually things can often move far more quickly than perhaps people might be expecting. And these are often related to dynamics that may be completely outside of the control of the person with the people or HR hat on contributing to that discussion. It might be the competitive environment around the transaction itself. It might be related to things to do with regulatory requirements. So, but all these other external factors that could mean that things A, might be moving incredibly quickly, or B, might actually move far more slowly than you're looking for. So balancing all of the other factors, many of which are coming up on screen, with that pace and that timeline thing, I've certainly early in my career found quite a challenge and something I've needed to work hard on.
Yeah, it makes sense. And I think there's some really interesting points which are coming up here. The system integrations, wow, it's a massive one, isn't it? HR systems, but also overall IT systems. It's one of the biggest challenges that businesses can go through when we're looking at potentially integrating or even divesting, because everything's intertwined and IT is complex, as we know. Data sharing, interesting to see that called out there as well. Certainly GDPR plays a really big role when we look at how to kind of, at what point can we actually share information across businesses? What's the right time? Do we need employee consent, for example? Some really good ones here. Helen, was there anything that sort of jumps out to you that you wanted to comment on from these?
No, I like the fact that it's a mix of like the very practical things of like, how do you actually, work out your headcount because your systems are on different platforms, etc. But also like the softer things, which are, always very challenging. So the culture, the comms, and employee relations is there as well. I think that's often a challenge, as you mentioned in the JV example you gave, Helen, and managing all of the various regulations across multiple jurisdictions all at the same time, and all within a deal timeline that people don't like moving, and in some cases can't move. So navigating all of that is certainly some of the biggest challenges that I've seen as well.
And if I may just add one more thing, you talked about systems and data there. There's this real challenge in some of this work around the pace and the timeline that I talked about, but also the accuracy. Some of the things that are being talked about here are going to be maybe heavily regulated and scrutinized by external bodies, or subject to significant legal ramifications related to the accuracy of what's going on. The fact that you might not know, as you said, what your base headcount number is because there are challenges with the different systems, it's going to become a real challenge there. And I've seen that. And that's going to then, something really simple will actually take a long time. So factoring these things into the idea of how long this stuff takes, some of the stuff is never going to be as simple as, it's this many people in that group. It's far more complex when it perhaps shouldn't be, but it will be. So that's something I'd really call out to people as well.
Cool. Thanks very much, Martin. That's great. So if we move on to the next slide, and we're just going to talk now specifically about integrations and separations, and the different deal types that you might get underneath that. It's not an exhaustive list. I'm sure there are many other areas that you could mix and match this. But just to give you some broad framework to put all the different deal types in. So an integration is obviously bringing two businesses together. A separation is obviously pulling those two businesses apart. And we've come up with different deal types underneath that. So if we move on to the next slide, we'll talk specifically about integrations. So I'm going to talk about the consolidation and transformation boxes at the front. So these two are all about coming together to make something bigger, to get that scale that you're looking for. So therefore, from a people perspective, what you're likely to be looking at is a back office consolidation, which means that there will be a synergy target that you need to make, and that will be a fundamental part of the deal rationale. And that's something that if you are a listed business, you have declared to the market that you will cut X amount of cost. So therefore, you have to do that, and otherwise it will have significant implications on your share price. So this means that from an HR perspective, what you're doing is you're supporting the business to develop that org design to fit that new sizing that you need, that new operating model, and helping to reduce headcount to achieve that synergy target. And obviously managing exit of employees, both from an employee experience point of view, but also to make sure that you're getting the cost benefit that your business needs. And also, if you're doing this sort of scale thing, you probably want to integrate the two businesses quite completely. So that means you'll have, very similar processes and policies, if not exactly the same. From a cultural perspective, you want to have one sort of uniform culture to as much as you can. And then from an HR function perspective, you will have one HR function servicing both businesses as if it was one business. And eventually over time, you will be completely one business. The difference between consolidation and transformation is that a lot of organizations now are using an M&A transaction to really transform their business and fundamentally change how they are operating. And this has a really, really big impact on people and how things are done. And so HR has a really, really big role to make sure that that is done effectively. So, for example, I've worked with businesses before where because of a transaction, they have completely changed their operating model to move from a geography-based model to a product line-based model. And that has ramifications across the entire business. So as well as doing the organization design to fit that new operating model and strategy, and the people transition work to move people into probably slightly different roles, potentially also remove headcount as well. You also need to really invest in change management to understand how is this new operating model changing what people do on a day-to-day basis, and how can we help people to navigate that change? So do they need training? Is it a case just communications? How do we equip our leaders to be able to manage their teams through that change? So that's it on consolidation transformation. I will pass over to Martin to talk about tuck-ins.
Thanks, Helen. Yeah, I'll give an example of a tuck-in that I was involved in a couple of years back. This was again at Intel. Essentially, we're acquiring some software engineering capability and product line with an AI kind of slant to it to integrate into part of the one of the chip development businesses. So we wanted to bring this organization's capabilities into what we already had. There were some customers there that we wanted to bring in and utilize, and certainly we wanted to bring in sort of the talent and capabilities of what that organization was doing. And it was a challenge. There was a bit of kind of bring some people in and a bit of sort of keep them a little bit separate in terms of maintaining their ongoing operations. And the biggest challenge around this from a people perspective, and we have it on here, is the culture of that acquired organization, because we wanted those people to be both Intel and the organization that they had previously been, in order to keep driving the success that they had driven before, and also to keep working with the customer base that they had developed and continue to serve that. We also had the challenge, and it says it on the second bullet, the last bullet on the column, about the new skills and capabilities within the division that they were coming into. They were really sort of the first people who were really focused on AI and a different artificial intelligence and a different type of working within that particular business. So again, from a skills and capabilities perspective, a whole new set of people and skills within that part of the business. And thinking about, well, how do we show those people a career path here where we want them to be, when actually they were maybe thinking about some other way of going within their future careers. So it was that balance of trying to have them both be Intel and within that broader perspective of what it means to be an Intel employee, but also keep an identity of their own. If I take you back to what I said earlier about that idea of transition and productivity drop, that's a very difficult message to be receiving and a very difficult transition to go through. So it needed to be carefully managed. And I'll say one more thing, because it comes back to the other thing I said about the challenge. We had an excellent business integration team here. We had a set of people who knew what it was like to have gone through this process themselves and were excellent at leading others through it. So it worked really well, not least because of the people who had been identified in the business to lead that tuck-in of the company we'd acquired.
Thanks, Martin. And just to kind of finish off a little bit around the bolt-on piece, and it is, again, it's something we see a lot in the TMT sector, as you'll be aware. It's a way to really quickly gain access to new products and customers, or even markets that actually complement the kind of acquiring companies' existing operations. So the challenge here is about, ensuring that bolted on organization retains its value, whilst the acquired business often needs to remain separate to do that. But from a people perspective, there's that fine line that we talked about between balancing the kind of essential integration requirements, such as, systems and processes, whilst also ensuring that the company feels like it can maintain its autonomy, even with its own leadership still in place, so that it can continue to build that value and actually not be compromised by being integrated too far into the larger organization. But then there's also that sort of follow-up question about timing, which is, at what point does that business actually need to become more fully integrated? Because examples that I won't give now, but that I've seen in the past, where some bolt-ons have actually been a little forgotten about. They matter from the kind of the reporting, the revenue, the margins, those pieces, but from an actual people perspective, they can often feel like they are just part of a different organization and they never really become integrated as one business or organization, and particularly not as one culture. So those people can often feel like they're not really connected and therefore not motivated to stay in the long term if that business is no longer sort of invested in or sort of put a sort of top priority for the leadership there. So I think that gives us a nice view of integrations. The next slide actually starts to talk a little more about separations. So before we kind of move to the Q&A, and we will get to that soon, let's just look at a couple of examples here, starting with the first two here, which is specifically about the separating out to sell to both a trade buyer and also a PE or a financial buyer. Now, there are important differences between the two here, and particularly the focus from the people side. So with a trade buyer, it's more likely than not that will be an established operational business, and that they'll actually be looking to make a kind of strategic acquisition. So it comes back to the points which we were making before. The reason why that business is being acquired is to bolster what they already have. So they're building their capabilities to create the value. Whereas on the other hand, a financial or a PE buyer may be looking to invest and is specifically looking to invest in the target company to create that value as well. So from a people kind of challenges perspective, both of these areas are somewhat different, and it also does depend on the sort of nature of the carve out. So with a trade buyer, it's likely that they will have existing infrastructure. So the target will need to actually integrate into the existing infrastructure. That could create overlap with certain functions, particularly back office functions such as HR, obviously payroll, finance, IT, that also is impacted as well. But additionally, just like with any sort of integration, and we've mentioned it, we've heard it a lot before, the cultural differences could also be challenging. So the change management and communications piece is really important there. Also, the challenges from a financial buyer perspective are a little different, because the carved out business will likely need to be set up as a standalone business with its own back office functions such as HR, finance, IT, payroll, and processes. And this is actually much easier if the carved out business is already set up to run as a standalone business, but it's very often that is not the case. So what this actually means from both of the business and the HR perspective, they need to think about actually what that separation is going to look like and what that blueprint might be. And the reason it's important to think about a potential blueprint or a separation handbook potentially is because you're actually making sure that all of those separation considerations and challenges are actually addressed before day one. So there are no hiccups, if you like, on day one when the businesses are actually separated out. So it's really important to think about, as we mentioned before, the planning for that, documenting exactly how to execute the separation, and also ensure that the business is set up to run as that standalone business. So, for example, there may still be dependencies on the group or the original organization where the business is being separated out from. And that means that there could be a need for things like long-term agreements, LTAs, or transitional service agreements, TSAs, until the actual separated business has set up its own independent operations. An example of that is payroll. So that's really like a high level run through of both the integrations and separations and the people challenges that people leaders would need to consider. I think, Helen, you're also going to talk about the separate to spin and IPO as well.
Yeah,
briefly.
I'll just talk about it briefly. I think a lot of it's very similar to the separate and sell to a private equity buyer or financial buyer, in that they need to be completely standalone. So you might have your TSAs from your parent, but the aim is to be as standalone as possible. The difference between the standalone and the IPO is that if you're going for IPO, your company will come under the standalone company, the new co, will come under a huge amount of scrutiny from analysts, and they will be looking at, is this company financially viable? Is it something that we want to invest in? Is it something that is going to get a good share price on that listing day? And obviously you need good revenue flows and revenue streams, but you also need to be able to show that you have everything that you need within that standalone business to fulfill all the obligations that you would have as a listed business. And that can be a real challenge for standalone for these kind of spins, because often some of the functions like finance and investor relations, they often are currently shared, sit within this, and particularly in the case of investor relations, would probably stay with the previous parent. So those need to be established and created, and that can create, that takes time, and it can be a challenge. So that's all I will say. So I think we can move over to the Q&A now with Martin. So I'm happy to start, Martin. My first question is, so we've talked a lot about how important it is for HR to be involved very early on in the deal. So what advice would you give to HR professionals who are trying to get a seat at the table from the very beginning?
Okay. Yeah, I think this one is about networking within the organization, finding out who are the key planners, the key decision makers in that M&A process, and building strong relationships with them. Talking about what support they need to get the best out of people, best out of the people, both the people in the deal. That's often a good sort of way in. How can I help you and the team you're working with? Because they might be sort of closely guarding the deal itself. Well, okay, that's fine, because sometimes this work can be secretive. That's fine, but let me help you and the team you're working with. And then you get closer to, okay, and how can I help out with the transaction itself? I've demonstrated my value, here, and then I've opened that door. And certainly if you've got dedicated M&A teams or professionals in the organization, not necessarily within HR, but maybe in finance is quite a common one where they'll have sort of valuation teams. Go network with them, find out what's going on, find out about the ways that those parts of the function work. So I'd be looking to do that, to build those relationships with the people who are more frequently engaged in those processes, particularly if there are dedicated teams.
And I think that there's, just to let everyone know, there's an option to submit some questions now as well on the chat. If you go to the Q&A, we've had one here, which is a good one. So it's curious to understand whether companies are looking to build M&A capability in-house, or whether these sorts of transactions happen so infrequently that they don't consider setting up a specific integrations or separations team. What are we seeing in the markets? Is that something, Helen, did you want to maybe take that one, and then we can come back to?
Yeah, happy to. Yes, I think it really depends. So there are many businesses, particularly larger corporates, who do have dedicated M&A capability. both obviously from a corporate perspective, you know, a corporate development team or whatever, and then also from an HR perspective. And we see that, as I said, in larger corporations that do a lot of M&A, and M&A really is a key part of their strategy. As Martin mentioned as well, there will be other teams, you know, not just HR, but within finance and things like that, who do specialize in it. But certainly it very much depends on the organization. If you're a smaller organization, you probably don't have a, you know, dedicated HR M&A person, but you should build a network of people who can turn their hand to M&A in case it comes up. And then from a strategy point of view, you probably, M&A probably sits within the strategy team. So they'll be looking after both organic and inorganic strategy if M&A isn't sort of a core part of their teams. Martin, any other views on that one?
I'd just say, you know, from my perspective, that's kind of the role I'm in, and I would tend to see those roles, and the people who have my job tend to be in larger organizations with a very active M&A roadmap. So by default, that's where those roles exist and where the organizations want that capability. So yeah, that's where I see that capability being most invested in.
And I think, Martin, another interesting one would be to find out from you what would be your kind of 3 top tips that you would give to an HR leader or an HR professional, potentially who perhaps hasn't done a lot of M&A before, but is heading into an M&A transaction, perhaps for the first time or second time. They don't necessarily have that you know, deep domain experience that you mentioned from the larger organizations, and how they might face that considering the current market and what we're seeing in the market today.
Sure. First thing is, it is very important to have a clear, detailed plan, and you can get sort of hints and tips for this out in your own networks. Or, I mean, I've worked in 2 organizations which have used Deloitte supported playbooks, which have been excellent in both cases. Just a little plug for Deloitte there, but they have been. So, you know, organizations use playbooks, they use a framework as a starting point. So definitely have that. However you get it, because it's hugely important. Things will move at pace. You'll need a strong baseline plan. Secondly, and it's a huge cliche, but it's true. It's a huge cliche in the M&A world. Every deal is different. Every deal is different, and you need to let that plan evolve. So, you know, have the plan and be really clear that you know what you're doing because you've got your plan, and then be very prepared to change and evolve what you do as the dynamics of the deal move forward. Because if you stick to it dogmatically, you won't succeed, because there's going to be something that requires you to work differently to what you planned for. And then the third thing I'd say is, if you've got the HR, if you've got the people hat on, make sure that's your focus. There will be lots of distractions and other things that are hugely important to the deal for other people working on it. Your job is to make sure that there's the appropriate focus on people. Back on that slide we had earlier on with, you know, all the reasons why deals don't succeed, what they wanted to achieve, a lot of that is about the people. So make sure you bring that focus to the point where you create, you know, a little bit of unpopularity for yourself by continuing to bang on that drum, but that's the job. So, you know, make sure that that's top of mind. Those would be the 3 things.
Thank you. Those are good answers. We've had another one in actually from the audience as well. What is the biggest mistake that you have seen organizations make as a result of people not involving HR early on enough? And I think we've touched on a couple of things there already, but what potentially is the biggest mistake? I'm sort of thinking through myself actually, but maybe Martin, you want to get started with that one.
Yeah. I mean, we've talked a lot about organization at sort of an organizational level of success of people plans, but actually I use a different type of very big mistake. We mentioned earlier on about the deal structure. You know, what's the deal structure going to be? There's a follow-on from that, is what does it mean for people in certain individual circumstances? And situations do arise where, because a certain type of transaction is happening in a certain way, it has very direct implications for people's jobs. Maybe they're on some kind of work visa that is going to be disrupted by this transaction happening. If you don't know all the right information and data about that situation, you could find somebody unintentionally out of work at very, very short notice. So there are those sort of more human, personal level mistakes that do happen, and unintentionally people are no longer lawfully employed and have to leave the organization. So that detailed planning can manifest itself at the individual people level. So that's something I definitely watch out for in terms of big impactful mistakes at the individual level.
Yeah, that's a great one, Martin. And I think it's easy to lose sight of those individuals when you're dealing with such, huge volumes of change and huge numbers of people. And, people are, they end up as a name on a spreadsheet, and, you forget about that kind of personal impact that it might have. I think one of the sort of biggest issues that I recall fairly recently was it was not necessarily not considering the people angles, but there was something just a miscommunication within the various work streams. And one of the things about M&A is that you have a work stream for everything. So there's a huge amount of interconnectedness. You've got finance, you've got legal, you've got tax, you've got HR, IT, all of these things, all of them working at, a million miles an hour to meet those deadlines. And sometimes the coordination and the collaboration doesn't quite work. And in this situation, the tax work stream had, as part of the tax strategy, and that has a huge implication on legal entity structure and things like that, they needed some employees to transition into a new legal entity that had been set up for tax purposes, but didn't speak to anybody in HR to tell them that they needed to transition those employees. So it was all very last minute, and it wasn't possible because we didn't have enough time to do it, because we needed to consult and all of that good stuff. So I think it's just an example of really, when you're in that when you're in a transaction, really listen to what's going on with the other work streams. Don't just focus on your own work stream dogmatically, because there are people and HR implications all over the shop. And don't rely on other people to recognize, oh, there's an HR or people thing. So back to your point, Martin, always bang that drum for, are you thinking about what means from people? Are you talking to the HR work stream, that kind of thing? Fab. So I think as we're getting to a close now, just wanted to give a plug for the next webinar that we'll be running in September, which will be focusing on employee transfers and consultation. So we will have a representative, a lawyer from our Deloitte legal practice to come and join us and talk a bit about employee transfers and consultation requirements with a focus on the UK and Europe. And we'll also provide some practical tips on how to manage it, particularly in those cross-jurisdictional deals that we highlighted this time. And I will then wrap up. So thank you very much for joining, everybody, and we will speak to you next time. Thanks very much.